Welcome to Jim Sells the Suncoast, your go-to podcast for all things real estate on Florida's beautiful Suncoast. I'm your host, Jim, your friendly neighborhood real estate agent, and each week we dive into the vibrant world of buying and selling homes while embracing the laid-back lifestyle that makes Florida such a paradise. In our episodes, we'll explore the latest developments shaping our communities and spotlight the incredible companies and industries that play a vital role in real estate, from movers to mortgage brokers, title agents to insurance pros. Whether you're a first-time buyer, a seasoned seller, or simply dreaming of that perfect beachside bungalow, we've got insights, tips, and plenty of local flavor to guide you. So grab your sunscreen and get ready to soak up knowledge, laughs, and a little sunshine as we navigate the Suncoast together. Let's make your real estate dreams a reality, one episode at a time.
And welcome to Jim Sells the Suncoast. Today, I am very excited to have Luz, let me re-say this again. Luz Ruiztagle. Did I say that right? I got it close.
You did. You got it right. You got it, Jim.
Luz here from Ames Mortgage and talking about mortgage process and how this all goes to help you buy the home. But Luz, tell us a little bit about yourself, how you got into this, and your travel record as to winding up here.
Sure, and thank you for having me, Jim. So I've been in the mortgage industry for 5 years already, and before that I was a nurse during COVID, and my sister has been a mortgage lender for over 20 years. So COVID was a hard time to be a nurse. So one night I got home after 12 hours exhausted, and she said, well, come work with me. And I said, that sounds intriguing. So I looked into it, and I took the training, got my license, and I started working with her, and then here I am. I love it.
Oh, fantastic. So coming into the mortgage industry, you had a chance to probably see it from outside and now you see it from the inside. What do you think is the biggest misconceptions buyers have about the mortgage?
So there is a lot of misconceptions. I still get amazed that I get these questions still asked today. A lot of people believe that they need to have perfect credit to be able to buy. Right now, that is not true. We even have products to help people that have a 500 credit score. They usually for government FHA loan, for conventional is usually 620, even though you might be able to get an approval with lower if you have compensating factors. And usually if you put the information on the software system and it will say yes, approved or not. But that is a huge misconception. People think they need to have 700-800 credit score, and that is not true. Another very big misconception is people believe they need to have 20% down to buy a house. And that is also no longer the case. It used to be many years ago when mortgage insurance was very expensive, but mortgage insurance is very affordable now, and it's better to pay mortgage insurance for a while rather than wait to save the 20%. We have a lot of programs that are 100% financing. You have VA, which is a benefit for our veterans and active duty. We have USDA that, depending on the location that you're buying, is also 100% financing. And FHA is 3.5%. Conventional is only 3% if it's your first time. And if it is not your first time, it's only 5%. So it is not as expensive to buy a home as people think. We also have a lot of programs that offer down payment assistance. So if people can afford their monthly payment and they are ready to purchase, there are options out there.
Wow, there's a lot going into that. So let's unpack that a little bit. Let's start with the credit score. So you mentioned a couple of credit scores. Some of them may surprise people that you can get in the 500s. And so what you're saying is the loan may vary based on what your credit rating is. So that doesn't mean you can't get one. It might change just some of the parameters of the loan.
Yes, so the 500 is a special product that not every bank offers. It is limited to a few banks, but we can offer it if the person has 10% down payment. So if you have 10% down payment, you can get an FHA loan with a 500 credit score. If you don't have the 10% and you only want to do the minimum FHA score, which FHA down payment, which is 3.5%, then it's usually 580. Now for conventional, it is usually 620, but if you have a lot of reserves, if you have other factors that the software can look into, I've gotten approvals for conventional under 600. So it all depends on each individual case.
So really the best advice right now then for somebody who thinks maybe they can't qualify is to reach out and touch base with you and actually walk through what their status is, what they need, whether they have enough money for a down payment. Maybe your credit score could be a little lower, or if you really need that, there's other ways to it.
Absolutely. The best thing to do, even if someone is, even if they're not ready to buy, but let's say that they have even a year or even 2 year time frame that they're thinking, okay, I want to buy in a year, I want to buy in 2 years. The best time is now. Talk to them, call me or call another lender, and then have about your goals, what you're trying to accomplish, your current situation. Like, I will review documents, I will look at income, and then we can come up with a plan, long term, short term, whatever the person needs. The best thing right now is to definitely don't assume, just make sure that you know the facts. We can do a pre-qualification very easy. There is no obligation, there is no cost, other than if you are running a credit report, but that will be the first. And there are options for no, you have to pay for a credit report. So there is, the first step is definitely to talk to a lender and, have a discussion about goals and what they want to do, and then have the lender review the current situation to come up with an individualized plan.
Great. And so that kind of ties into my next question, which really is, well, how much money do you need to have for a down payment? And again, that's going to vary, but let's talk specifically percentages, and then we can, do a Sarasota area. If it's a $400,000 home and 3% down, $12,000.
Mm-hmm.
But what are the minimums directly with each loan?
Okay, so closing costs have three components: the down payment, which is based on the purchase price. Then it has the closing cost, which is what it costs for the bank. You need to pay the bank for their services, the title agency for their services. You need to record the documents at the courthouse. All these things cost a little bit of money. So that are the closing costs. The down payment is one, closing cost is the second, and then the third component of the overall money that you need is what we call the prepaid. So when you buy a house, you need to buy your homeowner's insurance and pay for it up front. So you pay for the full year up front. That is collected at closing, and you choose the insurance agent that you want. That is something that you decide. You can shop around, find the best prices, then you tell us what you want to use, and we will collect that money at closing, and we will collect all the money is needed to have enough money when it's time to pay the taxes. So that is the third component, is what we call the prepaids. So looking at all that, depending on the down payment, so if it's a conventional loan and it's your first time, it's 3%. If it is not if you already had a home, it's 5%. FHA is 3.5%, and VA and USDA, there is no down payment. So you would only have the closing cost and the prepaid. And everything else other than the down payment, it's an estimate based on the price, but let's assume between 3% and 5%, and 5% is being very generous. So around 3%, 3.5% could be the rest of the closing cost.
Okay. What are there any loan programs that are really being overlooked right now, or that might benefit somebody, but we're just not aware of them?
There are a lot of programs right now, especially given the situation that we're coming up with more programs, so more people can actually afford. USDA is not used that much, but because you have to be in a rural area, but you will be surprised what areas actually qualify for people use it. But we have areas in Parrish, in Ellington that will qualify, and there is a very easy website where you can put the address and find out if it qualifies for USDA.
What is that website?
If you want to look at it, just put in Google USDA property, and it will take you to the web. All you need to do is put the address in there.
Great. So that's another option that could be available for some people. How is the qualifying for that? What does it do?
USDA, they look at the overall, so how many people are in the household, not just the borrower, and to have some reserves, and there is an income depending on how many people are in the home. So it's a different income limit for one person, two person, three. And if there's one thing that is you need to keep in mind for USDA loan is that they look into childcare expenses. So if you are paying for daycare and stuff like that, they will look into that, added to their liabilities, and the loan that does that.
Okay. So how does the VA loan, conventional or FHA? What are some of the differences we see?
A VA loan is actually a great product. Some people don't like it because they have some misconceptions about it. They think it's harder to qualify. They might think that the vet or they're not as qualified and they need a 0% down. There's so many myths about the. It is a great benefit that they actually earned and they deserve to use it. Same thing, they think appraisals are hard, and that is not the truth. The VA wants the veteran to own a home, so they will actually work with the seller and with all the parties to make they need to qualify income and they need to qualify for the benefits. So not everybody qualifies. There's a minimum minimum time of active duty, but we will need to get a certificate of eligibility that is super easy to get on a website. So if someone is a veteran of active duty, I would highly recommend that be the first step, because it is a great benefit. Also, if they have, they have some disabilities, they taxes. So there's a lot of benefits for our veterans or active duty personnel. So they should take advantage of that.
And I think I want to take a moment to point out too, that's one of the benefits of dealing with mortgage brokers such as yourself, where they can call you and say, hey, here's my situation, here's what's going on. You can kind of give them, here's all the different, how they impact you. Now you have a good idea of being able to select the one that's going to be the best for you, as opposed to, I only know about conventional, I need 20% down.
Mm-hmm. So that is one of the big benefits of being a broker. You are not tied up to a specific bank under programs, but we actually have access to many, many banks. And then we can see this profile, credit score, down payment, what will be the best program for them. And we can take that, let's say that it didn't work with one bank for some reason, we can take the application and move it to a different bank. So we have a lot of flexibility on that aspect.
Okay. When somebody is going to do what documents do you need to gather?
Well, the standard documentation is if you are a W-2 employee, we need to see the last 2 years of W-2s for all the jobs that you've had for those 2 years. Even if you're no longer working there, we also want to see the last 30 days of pay stubs, just to make sure that the income is with the W-2s and things are stable. Bank statements. The lenders want to see the money that you are using to purchase the home has been in your bank account for at least 2 months. Unless, for example, you have an inheritance or you have a sale of something that is of value and you can document where the money came from, the bank wants to make sure the money's been there 2 months. And obviously your ID. And
right.
So that's basically what we need to start. This is really not a lot. Now, if you own other properties, then yes, they're going to want to see the mortgage statement for those properties. And if, taxes and insurance are escrow, they won't require anymore, but they want to make sure, if you have one, we need to see the bill. They want to make sure that they can look at the full of your debt and of your income, because that's how they determine how much you qualify for.
And how is that different if you're, say, a 1099, you're in business for yourself, employed? What different things would you need to bring since you wouldn't have a W-2?
Okay, so your tax returns. The tax returns replace it. We'll need to have tax returns for 2 years. There is an exception to that if you were a W-2 employee and now you are a 1099, if it is the same line of business, we would only need 1 year. Because they can, as long as it is the same line of business, only 1 year. Other than that, it's usually 2 years.
Okay, so how would that impact if it's really the same business? It's not too big of an impact, but if it's very different.
If you're self-employed, for a painter, and you've been self-employed for a couple of years, and then you decide to change jobs, and now you're putting tiles, or you have a flooring company, they're businesses. So you will need 2 years of the new business, because they don't how well you do. A painter does not translate to how good you can be as having a flooring company. So as it is the same, you can have different 1099s, because sometimes there are painters that are so different companies will hire them and give them a 1099. So as long as it's the same line of business, the 2 years are okay. But change, then we start again to the new profession, I must say.
What's the difference between being pre-qualified and being pre-approved?
So a pre-qualification, a lot of people will just, have a verbal communication, I make this much, my is good, this is my credit. So that would be a pre-qualification. And pre-approval is when you actually go through and look at the documents, run credit, do an income analysis, and then you can give a pre-approval letter. They're very different. They're night and day. A pre-qualification, I wouldn't trust because you haven't looked at anything. It is just verbal. Right. Pre-approval, you actually already took the time to go through their income, do the analysis, put it in the system, verify income, and usually run credit. I usually run credit for my pre-approval. So when I give you a pre-approval, I have already done most of the job up front.
Right, and you feel confident then it's going to be, and that's why you're saying that.
Mm-hmm. Yes, when I look at the income, check your credit, unless you do something in the middle of the transaction, like do a huge purchase, lose your jobs, unless something changes dramatically, usually you can get approved once you get a pre-approval. Because if the lender did the work, we already analyzed income, we checked credit, so we already looked at everything, and the system gave us an approval. Now, if things change, that might be a different story. But with a pre-qualification, it's usually only verbal. So I don't do pre-qualifications just because it happens all the time. You talk to a client and they make this much, and then they give you the documents and it is not even close. Same thing with credit. They think they have really good credit, and then you run credit and it's like so far off from what they told you. There's a lot more debt that they didn't disclose. So yeah, I will be a little nervous to do a pre-qualification. Usually it's a pre-approval is what you want to see.
Yeah, great. That kind of leads me into the next question, which is when a new buyer or a buyer in general is going out, what are the things they should do first? And I think one is get pre-approval.
I'm sorry, Jim, can you repeat the question?
Sure. So when a new buyer is going out, what are some of the first things they should do? And based on what you've said, it would be get pre-approval. So one, they know their budget, they know how much they can afford, what they're comfortable with. And that's going to go a long way towards when they make their offer, that we can actually close that deal.
Yes, definitely. Yeah, I think it's good. It's good practice, realtors to pre-approval, because that way what you can target your search to a specific price. I think there's nothing worse than go out for a weekend and look at properties, fall in love with some house, and you want to put an offer and then you don't qualify. I think that is not. I'm heartbroken. The buyers saw they love it, they want it, and now they find out after the fact that you spend the whole weekend going to see houses that they cannot qualify for the house. So my advice will be, first step is get a pre-approval. That way you know that if you find a house you like, then you're gonna be able to put on it.
What are lenders seeing specifically on the Florida Suncoast right now?
What are the what?
What are on the Florida Suncoast market right now? What are you seeing?
Okay, my experience now is that definitely buyers market, sellers are motivated. We're seeing seller concessions. I think it's a good time to. And right now there is we have some specials going right now where we have some banks offering 1% on interest for the first year at no cost. So this is great, because then you don't use concessions to buy down the rate. You can use concessions for other things. Right now, I believe it's a good time to buy. A lot of people think they're going to wait for the market to crash. Well, that's not going well. They've been waiting for years. If they would have bought 4 or 5 years ago, the house, the price that you pay for that is permanent. That you cannot change. But if you bought at a higher interest rate, you can always refinance when rates come down. And at the end, you usually end up on the winning side by buying right away rather to wait for rates. Because for one, nobody can predict. Interest rates were slowly but steadily coming down at the beginning of the year, and the war with Iran that nobody expected and nobody knew it was coming, that threw rates into a little turmoil, and it's been up and down since then. So yeah, there are things that nobody knows when the rates will come down. So it is best to buy if you can afford it, and then in the future when rates come down, refinance.
So if you could give one piece of mortgage advice to Suncoast buyers, what would it be?
The first advice will be good. If you can afford the monthly payments right now, I think it's a great time to buy. So don't wait for the market to crash. Nobody knows. I mean, even though it's a buyer's market, overall picture, we are still on a shortage. There are not enough houses for the number of new households that are coming up every year. And what we call the new household is when, kids come of age, their home, they want to live separate than their parents. So that will be, it was to be 1, 2, or maybe 3. When when partners get divorced, they need their own home. So all this gets into account, and the experts, they all say, you think the market is slow, buyer's market. Overall, there is still a shortage. So if you can afford your mortgage, get the house. You get all the benefits from buying. You get the appreciation of the house, and when interest rates come down, you can always refinance.
Very true. So I want to hear your horror story. What's craziest or worst thing somebody's done before closing?
Jim, I don't have many horror stories on my own closings, but thank God, I hear people buying things, expensive things, right before closing. Forget that, the bank will check your credit a few days before closing. People changing jobs. They didn't happen to me, but clients that I talked to, one client was really happy that I gave him a pre-approval because now he could quit his job. And I said, wait, no, you cannot quit your job. You need to have your job to be able to afford the house. So that's a big one. Your job right before I killed your deal. Sometimes if you go and buy a very large purchase. So I have a friend and her brother was buying a house from a builder, and then they called me. He had just bought a boat, and the lender from the builder was worried, and we ran the numbers, and thankfully this kid was financially very, very secure, so he could afford the new boat and the new house, but otherwise he would have killed the deal. So no big purchases until you buy your home. Once you get the keys, then you can go and buy, but do not start buying furniture, change cars, change jobs. Keep the same profile you had when we had the pre-approval. And if there is something big that you think is coming, make sure you check with your lender.
Luz, thank you so much. I really appreciate you coming out and sharing some of this information. I love it. I learn something new every day. USD not a very popular loan, but it might be something that fits. So again, first thing you should do, talk to your lender, find out what you qualify, find out your situation. They can help walk you through it. I'll have all the contact information for Luz in the show notes. And again, thank you for joining me.
Thank you, Jim, for having me. It was fun. And if you have any other questions, let me know. Okay.
And that wraps up another sunny episode of Jim Sells the Suncoast. Thank you for joining me on this journey through the ins and outs of buying and selling homes here in our beautiful slice of Florida. I hope you found valuable insights and a little bit of inspiration to help you on your real estate adventure. Remember, whether you're looking to buy, sell, or simply soak up the Suncoast lifestyle, I'm here to guide you every step of the way. Don't forget to subscribe and leave a review so that we can keep shining bright together. Until next time, keep dreaming big, and let's turn those dreams into a reality, one home at a time.